Hey, what's happening, everybody? Happy Friday. Welcome to the Pulver Report. It is Friday the 21st of May. Let's go ahead and get started. It is 9 o'clock. We'll dive into a risk disclaimer here in a moment, get into the charts. We have a lot to talk about. Again, kind of fiercely defending the lines once again. The bulls are fighting back. I'm going to take a look at market watch for a little dashboard here. Futures market is on the rally. We have 0.43% in the Dow Jones futures. We have 0.36% in the S&P futures and 0.29% in the NASDAQ. So we will see how Friday turns out. Amateurs open, pros close. Is the market going to continue to defend the bullish trend? It's pretty easy to see on the SPY. We're right at a trend line from this week. We talked about it all week in Equities on Demand. We talked about it all week also in the Flex Room. Gold is back up to 1887. Big run, actually. Looking at lows from last night around 1870. And gold is now creeping up towards almost $1,900, 1890. So silver's up to 27.98. Got chart alarm set at $29. Oil is off a decline. We had oil around $62 yesterday. It's back up towards $63. So if you're out there, let me know. Here's a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Understand whether you're trading stocks, options, futures, Forex, cryptocurrency pairs, any asset class that you understand the risks. All right. This is not investment advice. It never will be. This is for educational purposes only. Got it? Good. Okay. Let's get into the charts. So I first want to take a look at some of the stocks we were playing this week for Equities on Demand. We had a massive crash this week in cryptos, but the market is fighting back. So let's take a look at the SPY and look at the weekly. Wow, look at that. So the weekly candle, just a massive wick to the downside. Look at last week's candle, same thing. If you think about, last week, if you were trading last week and noticed that, Monday, Tuesday, Wednesday was pretty rough. And then Thursday morning to afternoon, the market started to rally. Felt like the same thing this week. In fact, this is now kind of 3 weeks in a row we've seen the same type of behavior. A rough start, a shaky start to the week, but the lines get defended. Here's the daily chart on the SPY. Okay. It says, good news for your home, lumber prices dropping. True. However, lumber prices are dropping, which is great, but I already locked in the house price. So that doesn't really help me much. Okay, what I need to see is I need to see this 10-year note drop a little bit so my 30-year mortgage rate can be as low as possible without me having to go out, 90 plus days to lock in rates. If I'm, I will do that if I'm concerned, but I know that, like I said, I did my due diligence. I looked at historically the last, 10 years, 15 years, 20 years, and the peace of mind of locking in a rate is one thing, but we've had very little fluctuation, anywhere between like 25 basis points to 95 basis points. And those are some of the biggest extremes. So I feel like, if the Fed's willing to shrug off some of the CPI numbers that came in last week, this is what I'm watching. I mean, the bottom line for me is I'm watching the 10-year notes. If interest rates are going to rise, we're going to start talking about this. I listened to a good friend of mine yesterday give a webinar with his class and his service. And he made some great points talking about, everybody right now is hearing about inflation. Everybody right now is talking about inflation. There was an article from actually one of the videos I follow, this very popular YouTuber out there, Graham Stephan. He posts videos every single day, and he was talking about the year-to-year comparison. Now, if you can kind of take out the vicious drop we saw with flooding the market with liquidity last year with kind of this emergency spending, getting 20% of the world's money supply added in by last year. I mean, we added more money from the U.S. With a COVID emergency fund, essentially. We added more money in the last year than we have in the last 40 years. So year to year, it looks like you compare last year's low to this year's current status. And yes, inflation is a very real thing, and we're starting to notice that in certain instruments. But you compare that to 2019, we're like 1% different. So, I mean, we're almost on the same level as we've had for decades and decades and decades outside of these little crashes we've had every now and then. So I'm not going to downplay inflation, right? I'm not going to downplay it, but I think that everybody right now is talking about it. Everyone right now is aware of it. So I don't necessarily think it's happening in the extremes that we're seeing. Having said that, yes, I understand that lumber prices have been crazy. Here's random length futures for lumber. Okay. Now, what's going to be interesting is, are we going to have this discussion all over again? Here's the low, here's the high. This was 100+% gains in lumber over the last 2 months. Now, we have come off of those highs. Lumber has come down off the highs around 30%. Now, yesterday's candle Very aggressive bullish push. We are back up. I mean, this came down to roughly a 50%, just shy of the 61% retracement level based on the swing. So, we'll start having the same conversation again if lumber prices get right back up to the highs. That's going to be a problem, right? It's going to be talked about all over again. But if things cool down, if things settle down, this could be what a lot of instruments do. We have these really big runs up and they start to cool down. We have these really big runs down. They start to cool down, right? I actually just finished a video yesterday for cryptos. Just have to finish processing it. But I'm talking about the same thing in cryptocurrencies. We'll talk about it today as well. High to low on the big crash from Tuesday to Wednesday. Most cryptos sold off like 20 to 30% just in that day. Most of them are down 50+% from the highs. I think that we have this panic buying and the cryptos start coming back down again to retest these lows, maybe build a base around those recent lows. And then, we'll see where the real buyers are at. We still have some great levels that I'd like to, see Bitcoin hit, Ethereum hit, Litecoin hit. I like to see if they can get to those yearly pivots and where those mining costs are sitting. So I just didn't jump right in on the crypto craze. I'm sure that some of you out there might have done it. Maybe you were buying the dip on Wednesday when cryptos were crashing for that day and catching the fallen knife, and that's fine. But I don't think it's over yet. I think we're going to have another settlement back to those lows, and I hope that we do. I hope we can kind of get a nice technical level to build a base, start accumulating some small cryptos again, and see if we have great opportunities to retake these highs at some point. So, but we'll see. I mean, lumber, I'm certainly going to keep an eye on. It's very aggressive from yesterday's candle. If we start to aggressively push back up, I'll set a chart alarm. This is what I like to do, right? Set a chart alarm. Highs. Set a chart alarm. I'll set a chart alarm at the lows. And that way, I'm not checking this chart every single hour, but I can see, are we at the highs or are we at the lows? Okay. All right, let's go back to the SPY for a second. I wanted to talk about this trend line. Everyone can see this trend line, right? Let's see here. Joe asked a good question. Would you explain inflation, how it relates to Forex? Well, what's interesting, I mean, as far as trading Forex, what we are noticing, so I would say this, what we've been looking at as far as, inflation is a real scare, right? It's a real factor. It is a concern. But how it relates to Forex, I think what we're noticing mostly in Forex is a resiliency in commodity pairs. So the Australian dollar has been resiliently strong and it refuses to go down. Now, granted, the structure's there, the oversold and overbought conditions are there, the New Zealand dollar, the Canadian dollar, the Japanese yen has been excessively weak, so has been the US dollar. So I think that's where we've noticed the, inflation on raw materials, inflation on basic materials, inflation on commodities. That's starting to transfer into those Forex pairs that trade and correlate with commodities, the Aussie, the CAD, and the New Zealand, right? So that's how I've noticed it in the Forex market. Like I said, I mean, I really expected to see a bit more of a shift. I mean, we had some pretty aggressive risk-off trading as of Wednesday, but it's just frankly not enough. It's just not enough. So here is the SPY, again, defending the trend line. You will keep reading this. You'll keep hearing this forever and ever in trading. The trend is your friend. Okay, right now, these levels right here are being fiercely defended. And they have been since we started this rally back in October of last year, right? So we had our COVID crash. We know that. COVID crash way down here. And then we had our cup and handle, and it has been nonstop bullish ever since. Now, we know that this trend is long in the tooth. We know that this should be, dropping or correcting. But I think what we're going to deal with is we're going to deal with volatility here. This was about a 4 to 5% drop, and then the market's trying its best to rally back up. Another 4 to 5% drop, another rally up. Another 4 to 5% drop, another rally up. We've talked about this in the Pulver report. We've talked about this in my trading room, right? We know that the market might be volatile, but not necessarily able to break major lows and crash. And also, you might see that we're defending these levels, but we're having a heck of a time justifying new highs, right? Because a lot of optimism, a lot of recovery of these, recovering from COVID, vaccines, getting back to normal, a lot of that was priced in. There's a lot of forward guidance, a lot of forward pricing in the markets right now. There's just, and we keep talking about this, there's not a real bearish catalyst that is creating the technical follow through, right? We have the fuel out there that could easily be made the case. I mean, why did cryptos crash this week? Well, you go back a couple of weeks ago, earlier in May, you had Elon Musk talking about, number one, Tesla's no longer accepting Bitcoin for payments of cars. Number two, the environmental sensitivity and the energy crunch that it takes to mine a cryptocurrency. And so he was basically tweeting about look for more sustainably or environmentally friendly cryptos. So you saw Bitcoin start to topple over, and then this week we had a fresh ban coming from China, and the people, the Beijing crunch and the People's Republic were saying no more digital asset transactions, essentially. So, and it's not the first time they've done this, but it was enough to, those two events have fueled a bit of a sell-off. So let's go into cryptos right now. Okay. It will also influence interest rates. Possibly, yes. But right now, no, it won't. Right now, I don't think there's a single central bank out there that is wanting to raise rates right now. I think we have backpedaled into 2012 and 2013, 2014, where every central bank was cutting rates, going to near zero and holding there and kind of waiting for the coast is clear. I don't think the coast is clear yet. So, and when is it clear? I don't know. Maybe it's never clear. And I think that's what's so hard and difficult and wild about this environment in trading is, will we ever get back to normal? Will interest rates ever be 4, 5, 6, 7, 8% ever again? You'd think that they have to be at some point. But when? It's like every hiccup the market has, the Fed and other central banks are willing to step right up and talk it back up and say, hey, we're here. We're not touching anything for 2023. What are you guys doing? Don't sell off, right? So all I'm saying, there's a lot of noise. I'm paying attention. I'm aware, but I'm watching price. And if price can't break this trend line, if price can't break these levels, if price can't break these lows, the bulls are still in control. And the bears might be trying, or the bulls might be lacking a little bit of energy here, but they're still in control. And until we're on the right side of this trend line, or until price goes sideways long enough to make a decision, sure, we can make this decision and break. We can make this decision and rally. But are we going to break the highs or break the recent lows? That is the, $1 trillion question, because there's going to be lots of wealth lost if we start to decline. There's going to be, I'm sure at some major levels here, there's going to be a ton of buying interest, but same thing. There's going to have to be some type of flush down, panic buying, build a base, and then we'll start looking at accumulation levels once again. And it might be violent. We might have all of this. Okay, think about this for a second. Let's look at the higher time frame on the SPY. I know I'm spending a lot of time on this chart, but I think this is important because this will translate into a lot of other charts as well, as far as indices and stock markets. Look, if we simply have this from low to high, right? If this is just one massive swing, wouldn't it make sense that a correction, right? Let me just drag a fib on here. Let's go, where's my fibs? Right here. So from right here, if this is just one massive swing, would it make sense that we can pull back to the 23% or the 38% or the 30% or the 50%? Look at this. Right now, that 50%, this is really interesting. The 50% is right here in this massive gap from the COVID crash, and that's exactly where the yearly pivot happens to be for 2021. I don't think this is an impossible pivot to find. Okay, the difficulty is, are we going to find it on the right side of this trend line sooner than later, or are we going to go another 10 to 15% higher and just make the hard crash even worse? I don't know, right? But until price is showing evidence and confirmation that it's actually willing to break the trend lines or break these lows, I can't say we're going down, right? And so it's going to be interesting to see. Markets are up, right? We've got futures higher this morning, fighting back. I think that actually bodes well for some of our trades we're in this week for equities on demand. I want to take a look at some of those this morning. All right, but let's switch over. So we've got the SPY. All right, so here's our SPY. Let's go DIA for the Dow Jones. Again, long wick to the south. We came right back down to the monthly pivot. This is actually 2 weeks in a row. Let's go to the daily chart here. Okay, are we still showing reasonable support on the Dow? From this low, this is COVID's low in March 2020. Another test, multiple tests, multiple tests, multiple tests. Now, I could get more aggressive with this trend line. I could take these lows right here and connect and say, oh, the Dow Jones is breaking the trend line. But if you look at those outer trend lines, you connect this level right here and right here, we still have structure and we still have support. So I could see the Dow dropping. It dropped about 4%. We could see it dropping, another couple of percent and then seeing this thing go back up. We could see that it drops its 4%, stabilizes here, goes sideways with some indecision, and then goes back up. Unless we break the trend line, I'm not bearish. Okay, same thing for the NASDAQ. Here are the Qs. Okay. Now, this one I think has more volatility to it. I got picked up on several decent trades. I'm in Tesla back around $550. I got ARK at $98. Some of those big growth stocks I've been waiting for to buy at yearly pivots. I got picked up on some of those. Now I'm not like heavy on tech once again, but I think there's an interesting debate going on. I think if you've been following, Tesla, Elon Musk, Michael Burry was, the Big Short guy, right? He was, Christian Bale played him in The Big Short. He was one of the first ones that, called and sat and for like 2 years was waiting for the mortgage crisis. He was right, and it was a black swan event, and he made a killing. But he's now shifted over into, he's short Tesla, he's short growth. And then on the other hand, you have Cathie Wood representing ARK and their ETFs talking about disruptive technology, 3 to 5 year outlooks, and being super bullish on Tesla, super bullish on growth in disruptive technologies. So one of them's going to win, but I just don't know if it's, maybe Burry is more bearish in the near term, but just wants a better price. Maybe he hates it. Maybe he hates Tesla. Thinks it's worthless. I don't know. But it's gonna play out in some fashion. So again, I don't like buying Tesla high, so I think the early pivot's a good spot. But looking at the NASDAQ, looking at Microsoft, Apple, Facebook, Google, Netflix, right? You can throw Tesla in there because of high market cap. We might see this. We might see this type of behavior. Let me use a straight line. You can see this type of behavior in the Qs. Right? Which means we could still defend this, right? I mean, having this support the last couple of weeks, the NASDAQ can find a way to kind of test these highs once again. This is a very difficult environment. You can see here that we are very directionally neutral, right? It's hard to say I'm a bull or a bear when there's very limited room to go up or down. The bears aren't breaking, the bulls aren't breaking. Now, I would say if you have a chance, this certainly looks like a better chance to buy low. If this structure holds, you're buying low, stop area, and you're going up. But it starts to get smaller and smaller and smaller, okay? And eventually, it's either going to blow off these highs and crash even harder with some massive expansion, or this is going to just go to the point where it has to correct and fall. And if it does, it's probably coming back to this level here. It's probably coming back to this level here. Lo and behold, there's a yearly pivot right there for the QQQ, right around $265. So could we have this thing drop? Let's check it. Let's say that we're up at new highs again over the next month, right? If we drop to that yearly pivot, that's a 23% sell-off. Do you think everybody would panic if the NASDAQ dropped 23%? Not necessarily. If we drop 23%, let's look at it in perspective of our big crash, right? So this low, this high, shallow pullback, we hit the 127. I think we should come back into this level. Technically speaking, I think we should come back into here, base, and then we're looking for later highs, right? Again, it's not going to be immediate. I don't know if we're going to have the type of, COVID reaction like we had here if we start to sell off, but I'm looking for some type of rising wedge, just getting harder and harder to have direction. What we are noticing is that these key levels, these key technical levels, these support levels continue to be defended. And so that is why I can't say that I'm bearish, because there's no evidence yet to see confirmation for those bears. They're close. It is really close. Like, we've had 2 very close calls for the last 2 weeks, right? This is a third week. So 3 weeks in a row of coming down and saying, okay, we've had a pretty rough go. Monday, Tuesday, Wednesday, not too great. And then, this week was, everything looked awful on Wednesday. And then by Wednesday close, Wednesday's afternoon, it looked a lot better. Things kind of righted the ship and stabilized. So here we are talking about, SPYs are still doing fine. Dow is still fine. Qs are still fine. The VIX, look at the difference in volatility this week. Did we come back up and spike up to last week's highs? Nope, because I set a chart alarm last Friday, right? Did it come up and poke those highs? It did not. 29.2 never hit. We're right back down to 20. We could probably end up going back down into these recent lows again. So if the volatility index can't spike up any higher, the stock market, the indices are probably going to stay supported and buoyant and resilient. Make sense? All right, let's talk about some cryptos for a moment. Let's go to Bitcoin. So Bitcoin is trading at 40,920 right now. I do have a video coming out on this. Look for this to drop on my YouTube channel, hopefully in the next 1 to 2 days. I have a team in place now that's doing some editing for me, so I gave them a bunch of raw content, and they're going to splice in and make it look all fancy. So I'm looking forward to that. I want to see what that end product looks like, but hopefully it's a nice solid 15, 20-minute video for you to check out. But I'll give you the summary, right? I'll give you the live summary. Basically, it's this. I'm not catching a falling knife, right? We know that Bitcoin is volatile, We know that cryptos are volatile. We know that over the last 10 years, we've seen, 5, 10, 20+% days where Bitcoin and cryptos have been down. This was one of those type of weeks. We saw a week where cryptos were down as much as 30 to 50% in the same week. So look, this might be enough volatility to scare out a lot of legitimate traders. People that have been dabbling and thinking, oh, this growth stuff in cryptos is really awesome. I love it. I made a lot of money in it. But nobody wants to deal with this type of volatility. Nobody wants to be up $10,000, up $100,000 and watch it disappear, right? And you're like, well, now what do? Do I buy more? It's like, I think there's still some skepticism out there for long-term. Now, I think short-term, cryptos are great. Short-term, the amount of growth and opportunity that we've seen people with, $1,000, $500, a stimulus check, right? $1,200, $1,400. Turn that into $10, $20, $30, $40,000 or more. Ridiculous. Fact. I think I talked about this week in the Flex Room. If you took $100 last year and you put it in Dogecoin, it's worth 20 grand. Now, not now, but at the highs around 70 cents, it's worth 20 grand. So you take $1,000 stimulus check, you're now talking, what? $100 to $1,000 is 10 times that. You're up 20 grand, 200 grand, just like that. It's crazy, right? So look, the growth opportunity is there in cryptos, but here's what I think is going to happen technically. I think we have a flush down. Now look, if this week's drop in cryptos, and this is what I explained in the video that you'll see, I'm still looking at these really important levels here. There's a great pivot cluster around 25,000 to 20,000. That is my level where I'm interested in buying. So I know that we tapped 30,000, right? We went right at 30,000. I think that we have this flush. We pop up here, past support becomes resistance. We start to slowly make our way back down. Now, maybe not slowly, maybe it's fast. But we start to make our way back down. I'm looking for this level to get tested, maybe a little bit lower. And then I'm starting to revisit some buying levels, right? And what is kind of exciting is let's say that, let's say 20 grand. Let's say we can get back in on Bitcoin at $20,000. Well, if we ever retake the highs at 65,000, that's a 300+% increase. So again, it's very appealing to see like, what? I think Bitcoin can take out these highs. My break even is now $20,000. If we get up to 60 plus, that's 3 times my money. There's not a lot of stocks you can look at right now after 2020's growth. I don't think there's a lot of stocks you can look at that show that type of promise. But granted, there's a lot of risk in cryptos. There's a lot of volatility. We might not see these highs for the next 6 months. I don't know. Right? So with everything else, there is risk. You have to understand that there's tons of volatility and there is uncertainty around this. If China's little ban is going to cause a lot more regulation globally, that could be a concern, right? So all I'm saying is I'm going to be patient on these cryptos. If this crash from this week, a little panic buying comes up and gets hit from past support right over here to become resistance, I think this could come back down and retest. So what you see on my chart, this is a chart alarm at the low from this week, a chart alarm here at this pivot cluster, which is around 25,000. And this orange line is actually a yearly pivot from 2021. So this is this year's pivot. That exact price, if you want to write this down, is 21,000, right? And so you'll see this coming out on my YouTube channel, hopefully in the next 1 to 2 days. Just a nice thorough video on all these levels that I'm looking at buying these cryptos. Ethereum, same thing. If we have a high, low, lower high, lower low, Ethereum is around $1,250 down to $500. I know that's a big area, but I would essentially say $1,250 is my position 1. Let's say 800 is my position 2 and 500 is my position 3. I'm still holding Ethereum from $400. So, fortunately, I got in with pretty good timing in cryptos in 2019 near these lows and was able to experience a lot of this growth. Now, I did also take profit recently. That's the other reason I'm going to post the video is, what did I do with my profits? I did roll over a lot of my profits. I talked about this in my Flex trading room. Tyson and I talked about it in Equities on Demand. He and I had some late night conversations because look, technically it's just like this thing has to drop. We can't see 6, 7, 8 weeks in a row, 8 days in a row, all bullish, ridiculously overbought. It was just overdue. Like technically this was overdue. And it just was violently bullish and violently bearish. And that's the unfortunate thing about the volatility. Okay. But I like Ethereum. I like Litecoin. I think that this is still a year that, after this, maybe we shake out some of those altcoin growers, right? Maybe the the links or the stellar lumens or the EOS or the algos or the manas or the other coins that are like altcoins versus Bitcoin, maybe Bitcoin shows more stability versus the altcoins. Maybe these have just a much more aggressive sell-off. But at the same time, it's like Bitcoin's still kind of the leader. It's kind of the trailblazer. What it does, others will follow. So if we see some stability in Bitcoin and some growth in Bitcoin, we'll probably have altcoins, do as well or outperform. But Ethereum I like a lot. And Litecoin I still like a lot. There's still more upside when you compare the two. So if it's Ethereum versus Bitcoin, I think this was a necessary pullback. Okay. I mean, from this recent low, this swing, Ethereum versus Bitcoin is up 175%. Okay. Now this is a head and shoulders pattern. Take a look at this. So we had this amazing head and shoulders pattern right here. And the market, tests the neckline, pulls back again, makes a higher low, and then breaks through and blows through this area. Now, from this swing, here's a low, here's a high. Even if we just have a decent pullback, I'm still looking for this to have another leg higher. I think that Ethereum can still outperform, but this could pull back from this low to this high. We could legitimately pull back all the way into this area and still have buyers in control. So there's a lot of volatility that can play out in Ethereum. I'm not in a hurry on any of these. Basically, it's this. My levels are at good prices in 2019. I want to get back in, but I'm going to see if price will come to levels I want to buy at. I'm not just going to toss money in and say, okay, I've got to get back in. If you wanted to do that, I get it. That's the same thing as it doesn't really matter whether the stock market goes up or down. If you're consistently investing year over year and the market's able to go higher, you're going to do just fine. And the same thing could be true for cryptos. We could have growth after growth after growth, and maybe I miss out. Maybe me trying to get these great levels on cryptos, I miss out because I'm trying to be too perfect with the entries or too specific on the levels I want to enter in at, right? So, but again, I'm willing to accept that. All right, let's move on. So we've got a lot of cryptos out there. Again, look for that video to drop on my YouTube channel, hopefully in the next 1 to 2 days. I want to talk about some currencies for a moment. Let me go into the currency strength chart right here. So do we have any questions? So Sakib, you good on that yearly pivot, right? Good on that? Okay, here is the currency strength chart for today. Everything is still fairly quiet for a Friday. We have the euro on the weak side, dollar. Everything's just kind of jumbled together. Yesterday's price action, dollar was hit pretty hard, and that was in the afternoon. Okay, yesterday was Thursday. We had this kind of recovery day on Wednesday. So Thursday, the dollar was hit pretty hard, and today everything's kind of bleh. Everything's stuck together in Forex. So let's take a look at a couple of pairs. I still, my outlook is very similar. Let's go dollar index and DXY. Dollar index and DXY. So dollar index, we're at 11,677 right here. So again, no major damage has been done to the dollar. We've had essentially an indecision week. Here is the entire, Friday, Thursday, Wednesday, Tuesday, Monday, everything trading right here for the day. So have we had a lot of movement this week on the dollar? No. It's stuck here. It's stuck here, right? So are we going to, break these lows and keep pushing the dollar down a little bit? It's possible. We're still on the left-hand side of the trend line. If we hold these lows, right side of the trend line. Easy video if you want to check it out in my Keep It Serious and Simple video series. Check out trend lines. This is for years my best practice on how I trade trend lines. Now granted, I'm long the dollar on certain currency pairs. I've gotten in probably early. I'm probably anticipating this. But I think the next move coming is either we get on the right side of the trend line here and start to make our way back up into this area or this yearly pivot, or we end up coming back down into this low again. We test this level, create a double bottom, okay? And it might be ugly, but again, left side of the trend line versus right side of the trend line. Once we break it, I'm looking for the dollar to return to these highs. Now, if it's a double bottom, we have this low to this high, and you would measure that. So that low to high, that low to high. 221, good, that's a good thing. So it is 9:30, Wall Street's open. We got a nice little pop-up on the W, or the I, or what, IWM. Let me check my broker stuff for a moment, because we have some trades we're interested in watching. If IWM is going up, that means our call side's looking a little bit better. Janice, what's up? How are you? Good morning. Okay, any questions on that dollar? So I'm going to get logged into my stockbroker here in just a second. Where's that popping up here? So dollar index, again, if we break the lows and start shifting lower, it doesn't change my outlook. I know this could be short-term dollar weakness. I get it. Left side of the trend line, still in control. But once we get over here, I'm looking for a bottom. I'm looking for a bottom. I'm looking for a base. I'm looking for bulls to step back in. take this thing back up, at least get to this high. If we break this area, and this is in fact a double bottom, then there's your low, there's your high, and you measure that move up. So we could have a big recovery in the dollar. And that's one thing that, maybe we have to think about. Where can you park your money right now? Right? I mean, stocks, look, you can obviously park your money in stocks. Stocks still have a lot of growth. We've talked about this transition from growth to value. I'm very interested in stocks that have been beat down, that are probably under $30 and offer, historical metrics that are, healthy cash flow, raw materials. Honestly, I'm in a lot of raw materials with steel, aluminum. I'm not super heavy into energy. I did get pretty excited about the EV sector, and I got some nice levels on some, again, it's speculation because it's going to take time to develop, but I've got some, bargain levels on Ride and Lightning Fleet and other ones like, XL and Ride and NIO. I got Tesla at the yearly pivot, or close to the yearly pivot. So long story short, I'm in, things like Alcoa and CLF is one that I'm in. CLF is in steel, and X is United States Steel. I mean, I really like these. They're boring. They don't move a lot. They're super low volatility. But I'm looking for, any chance I can get to add more and accumulate. I'm looking for this just to, buy more shares. I'm selling covered calls and collecting premiums on this. So I'm just kind of working these, little positions in the background, making some steady weekly income in addition to trading, both directions. I'm, equities on demand. If anybody's with us, you're noticing that Tyson and I are in agreement that we like being directionally neutral. And I think that's the best way to be because we have the way I see the technicals right now, we have limited upside in those indices, right? You think about the SPY, looks like a rising wedge. That trend line is getting close to breaking, but it's like rising wedge, running out of steam, overbought conditions. Q, same thing. Dow Jones, same thing. From COVID's run, we've stretched really, really far. We could still do it, but it's going to be volatile. It's going to be tough to see those markets really break out. Okay. All right. Let's talk dollar index DXY really quickly. A couple of currency pairs. So DXY has nearly come back to the lows. I'm going to set a chart alarm right here at this low and just make it lows. Check for weekly divergence. I'm going to check for weekly divergence on this. Okay, so here is my relative strength and my momentum oscillator. If we do make a fresh low in price, we're already starting to notice disagreement there. That's a good thing. If this was disagreement in addition to this going lower, I would say, man, this has to be a great trade setup for a pop to the upside. If I go to the weekly chart, let me get this back in. Okay, even if price makes a new low, if we go this low from the weekly chart down to the same low or a fresh low, there's a lot of disagreement right there. The one thing I'm noticing on the weekly chart is this DXY on the weekly is not oversold yet. And I don't think it'll get there. Now, I could also argue that if we do make a fresh low in price, this could still show us hidden bullish divergence in addition to that momentum oscillator. So technically speaking, I have the same outlook. And I'm trying to be objective here. I think technically this is a great spot with multi-year support to see the dollar at least get some strength. And so back to my kind of rhetorical question, where do you put your money? If we start to see the stock market's running out of room to go up, growth is getting beat down, value stocks are the way to go, but they're slow and they're low volatility. Cryptos are volatile and nobody wants to jump back into cryptos. Honestly, people just might park their money in the dollar. If there's discussion, I know that the Feds they're not talking about raising rates till 2023. But if the 10-year note rallies, if interest rates are going to rally, if we start breaking that 2% threshold on the 10-year note, I think that it is inevitable that we're going to start seeing an exodus from stocks back into treasuries, back into bonds, and back into the dollar. So call it safe haven, call it boring, but it's like with the amount of wealth that was generated from last year to this year, I think the dollar could actually get a lot of bids. So, again, fundamentally, it could make sense. I think that, the whole story is the death of the dollar. The dollar's getting crushed. Nobody's going to be in the dollar. And that could be the least expected move, right? A lot of people right now are like, what's happening? The dollar's getting so weak. It's going to get so weak. Well, that could be the most contrarian play then. And typically, the big money is following a contrarian play. They paint the narrative of the dollar's going down. It's inevitably going down. And then what happens? It does the complete opposite. So I would not be surprised if the dollar gains some bids over the next, 3 to 6 months and actually does pretty well. Okay, but that's my opinion. All right, let's go for a couple more minutes here. I want to talk about some of the stocks we're in for this week and just kind of see where we're at. So if we were filled on these, so I did want to check. Here's my broker platform for IWM. Let me get logged in. Okay, let me get logged in here. So what I'm going to do is walk you through some of the power play trades we took this week in Equities on Demand. So we have of the 1, 2, 3, 4, 5, 6, 7, 8 of the 8 opportunities, we had 6 of them fill. And yesterday when we reviewed them, they were right at these kind of lines in the sand. So if we have a bullish day in stocks today, all of these should be fine. We also have some expirations coming from some power play strategy 3s from a couple weeks ago. And same thing, we'll review those as well. I also want to take a look at IWM to see where we're at today. There is a chance that IWM is trading at a better call price. So currently, let's check IWM. IWM is at 221.10, and I want to see what that call is trading for. Let's go to the daily chart. Okay, so we just gapped higher, actually. I'm going to see what this call is trading for. I might close this out. IWM, currently it's down, but I can essentially wash most of this. I can wash most of this right here. So let me check and see what it's trading for. So we were talking about, I can't think of the price we had yesterday. So right now it's trading at about a $2.30 credit, which isn't bad. I'm still going to lose a couple $100 on this. I'm going to go ahead and put in see if I can get a 230 credit out of this. I'm going to go 230 on the IWM and close it. See if that'll take. So a little update. I'll put this in Telegram actually for Equities on Demand. It's just going to be a quick one. So IWM looking to close at 2.30 limit credit for calls. Okay. So just making a quick update there for Telegram so traders know we're going to roll into that class in about 20 minutes. Hopefully we can get filled at 2:30. I will just set a chart alarm right at today's level. So we have a gap. Let's see if we can come back and tap that high. If we do, we should have no problem getting that 2:30 fill. So check. P&L should close. Calls. So that call side should close. Okay, if it comes back in and fills the gap, then not so hot, but we'll find out. Okay. ETF is up 50% recently. Should I invest in U? Is that the ticker for uranium? What's the ticker? Are you saying invest in uranium? What's the play here? So uranium. So how are you playing it? Are you doing futures? Are you doing uranium companies, miners, producers? Obviously there's a lot of ways to do it. So if there's just something that correlates with uranium prices, that's what I'm trying to look for here. So give me a ticker that you're at least looking at. But Royalty Corp, Energy Group. I don't know. I don't know. So it's the same thing with gold, right? Like I don't love, all right, so just closed out $2.30 on IWM. So I got filled. Now, look, in the next, maybe 20 minutes, this could probably go up to like maybe 245, 250 if we end up pushing bullish for the morning. Look, if some of these are like dirt cheap, if they're like $3, $4, $5 and they're mining or I don't love that. I think it's a little riskier. Like, look, when I trade gold, I trade GLD, GOLD, I trade SLV. I try to stay as correlated with the raw material price as I can. I just think there are other factors that come with the actual companies and miners. And, if it's energy related, sure, they can benefit from higher prices. But if they have, a lot of overhead and expensive processes, like that's not necessarily good for a stock price. So like I said, just be careful. But I'm trying to find, if you look at just raw materials, ticker is U, Canada, which is being evolved. All right, so my U is not that. But you said in Canada, so let me see if I can find that Canadian. So here's Uranium Participation Corp. That is Canada right there. We also have, let's see what that is. So has it had a good run over the last year? I mean, from $4.32 to 5 and change? Sure. I mean, I'd say that it's pretty safe to see that the trend is up. I mean, you go from this level here, you go from this level here. I mean, the trend is certainly up. The good thing is there's also not a ton. I'm on much smaller time frame here. There's not a ton of volatility with this. So I could see, wave 1, 2, 3 is still pushing. Maybe we have a little correction coming, but I'd look for more upside. I think we can probably get back to these highs around, $6 to $7. Let's see how high this has gone. Does this go any higher? Weekly chart. Oh yeah, we've gone way higher. Okay. Interesting time. I mean, will we ever get back to 05 highs? I don't know, but we can probably get back to, this $7 to $8 level, which from current price is not terrible. But I wouldn't expect that to happen overnight. It's probably going to be a slow grind to the upside. All right, let's take a look at a couple more things. I want to review some of those power plays really quickly to see where the lines in the sand are at. So Dollar Tree, there we go. So IWM just hit those highs. If you're going to close it out with me, 230 or better should be filled right now. Okay, and hopefully it rallies. Hopefully it's enough. I mean, heck, let's get break even out of that if you didn't close it right along with me. So DLTR, we're in a Dollar Tree bull put spread. 109.23, and we have a sold put at 109. So if it stays as is, we'll collect that 30-cent credit by the end of the day. DG we didn't get filled on. LEN is the other one. Let me show you the chart here. All right, how's the audio now? Audio back? Audio back? Yes? Okay. We should be good. I think it just went to a different screen on accident. We good? So I'm not sure where I lost everybody, but we should still be alive and live. Yes, okay. So I'm not sure where I lost everybody, but I'll just quickly recap. So everything from our Equities on Demand Power Play version 2 is looking fine. So DLTR, just quickly go through these again. We sold a put at 109, and it's at 109.27. So if we stay, and it's close, obviously it's really close. But this was certainly better than yesterday. If Dollar Tree can hold and we can have a rally on the day, like today's candle looks pretty promising. Let's see if we can get back into like 109, maybe 110 for the day, defend that area, and we'll be good on that credit for this week. DG did not get filled. That was canceled. LEN looking great on the day. We sold a put at 96. It's at 96.68. So let's see if we can hold there. SBUX Starbucks. This one we sold the 109. It's at 111.71. That is fine. Disney. We sold the 167.50. It's at 172. That is fine. So that's going to be looking for full credit. Tractor Supply, TSCO, 183. We sold the 182.50. It has to hold there. Okay. And then DHI was the last one. That's DR Horton rather. 92.20, and we sold the 92. So they're right there. It's going to be close. We might have to take these right up until the last 15, 20 minutes of the day and see how they're sitting. If we're going to collect full credit, there might be a way that we could probably have in our Equities on Demand class. We can have the discussion around break even, right? Like maybe we say, maybe this is a week that we just take break even on these and get out of these trades, which means we could go in if we collected 30 cents credit. So I'll show you the spreadsheet here. If we collected 30 cents credit to take the trade, we can go in for profit, put in a 30-cent debit, and have this thing close out at break even. There's probably a way to get out of this trade this week with no loss, no risk. But obviously no money. So, which all things considered, break-even week's not a bad week. If we're willing to hang it out until the end of the day, then we could have all these kind of safely in profit, and we can collect $270 of profit. That's $2.70 credit on one contract. I know a lot of traders are in these for 2, 3, 4 contracts, and you can make a pretty decent chunk. Okay. Discussion of SBTX power play, SBTX. So we have SBUX. If that was a typo there, Donna. Yeah, Starbucks is where we left off. Yeah, I just went through them. I just went through all the levels. So I think we're good. So we're looking good. We'll roll over into Equities on Demand here in 13 minutes. Thanks for being with me this week. I want to make a quick announcement. You should start seeing a couple of things. I'm doing a lot more videos on my YouTube channel. One I will have is, you'll see it here. I'm going to type this out. So you can look for this on my YouTube channel to come hopefully in the next 1 to 2 days. Crypto crash or crypto dip. Okay, that's going to be one video you'll see coming to the YouTube channel shortly. Also, MT4 back tester and portfolio management. So this is, optimizing robots. I did 252 tests over the last 5 days on one particular strategy. So I'm going to share those results. So optimizing robots, and share that. I also have some software if anybody's interested in getting for MetaTrader 4 from Tick Data to get it to, easily organized and running tests where you can run all these tests and presets and it does it all for you. You don't have to do test after test after test, currency pair after currency pair. So it saves me a lot of time. And I just finished those tests yesterday. So I've got to compile the data, take a look at everything, and kind of dissect what worked, what didn't. And then we'll talk more about that next week. But that video is coming soon as well. Okay. And there will be more. I still want to do some broker videos out there. I have, 4 or 5 more brokers just in stocks and options to talk about. I want to get into cryptos and Forex as well. So that playlist is Trading 101, how do you navigate or how to use a broker platform. I'll add to that playlist. I'll also start adding to some indicators. But I've got some topical stuff coming with just some, what is the difference between trading and investing? What is the stock market? What is Forex? What are cryptos? Blah, blah, blah. So videos like that hopefully everyone can jump in and get some nice, information on. But I appreciate, everyone coming out for the live sessions, checking out the recording. Great. But smash that like button for me. Hit that thumbs up. If you subscribe, click the notification bell. When we go live on Mondays and Fridays, you'll know. But every Monday, Friday at 9 a.m., we're live for the Pulver Report. Okay. And I would appreciate it if you not only like the video, but also take the video link, take the channel, and send it on. Send it, share it. It's free education, talking about several different markets and asset classes. And I think this is a good time to be a trader. I think it's a great time to be a trader. So, all right, everybody. That's it. I'll go and wrap it up there for the Pulver Report. And see you all in the next 10 minutes if you're with me at Equities On Demand. And see you next week. All right, take care. Talk to you soon. Bye.